Hey guys, I hope you're well. Welcome to today's edition of 600 Seconds of Trading. It's December 20th, and we're going to provide you guys with a quick little overview of the markets. So, this is the Trade Captain website. If you haven't been here before, we produce live analysis and news here. Now, we usually do the 600 seconds here in the live trading room, but because it's the festive season, we're actually taking a break, but we're still going to record a video too, like this one, until we're back next week. So let's begin, and we're going to begin with the euro. And as always, I need to stress that trading financial markets is unfortunately risky, and there's a genuine risk that we lose all of our invested money. Okay, so this is a 4-hour chart in the euro dollar. Price is trading between 17.12 and 19.64. There's not much happening right now. Price moved to the upside, but there's very, very little change in most major markets. Um, so we can't really do too much here. I think this can go up a bit, maybe 119, and then maybe probably back down to the middle again, and then we'll see. Maybe we'll have a break in the next few days, but the way it looks like right now, it's unlikely that that's going to happen. The big next event is going to be on January 5th. At that time, we have the non-farm payrolls. Hopefully, though, we don't have to wait until that. So for now, break to 117.12 can take price down to 115.51. The alternative is that we take out 19.64 and the market trades to 120.93. Here's the price of Bitcoin. And the Bitcoin had a little pullback. Now, obviously, if you read online, especially the headlines, and especially people that don't even trade these markets, they make a big sensation. You know, Bitcoin is down with 9%, Bitcoin is down with 10%. Who cares if something is down with 10% if the thing is up with like 1,500% since the beginning of the year? If not even more than that, right? Yeah, right now it's even more almost. Everything has to do with risk and reward, and that is what is interesting. So yeah, the market is down, or was down at one point with 19%, but who cares? It's about the potential return, and that is why people trade these markets. But a lot of people that just write articles or that just analyze the market and don't actually trade them make a big fuss of them. Anyway, this is Bitcoin, and as you might remember, we said that if it goes down to 17,556, this is going to be a bullish trend. I mean, actually, I said we're going to be bullish from this level, and I'm going to be bullish as long as it's above 15,296. So the market moved down and bounced up a bit, and it's trying to bottom out. And as long as it's above this level, I do think this can go to the upside. On the other hand, take out 15,296 and this market can continue to go down. And guys, these markets, as many of the other crypto coins, they have big corrections sometimes. 50%, 40%. In fact, when this market declines by 40%, it's usually a good time to look to go long. So yes, if we take out 15,296, this market can potentially continue to decline, and that will take price down, maybe down to the next support level, which would be a logical thing. And then maybe, because I wouldn't surprise me at one point if we have some sort of a reversal and some sort of a bearish market for a few months in this. And this could be the beginning to that. But for now, we haven't breached levels. We want to remain bullish. And this is also what's going to be really interesting in the next few days if we actually take out this level. Because if we take out the level, again, we might be beginning in this bearish market. And a lot of people that just started trading, they don't actually accustomed to this. They're accustomed to you just buy and then you step away and then a few hours later or worst case a few days later you'll be up because it's been very one-sided. But obviously, eventually, you will have some sort of correction, and at that point, you will see some pain. But I think in the long run, these cryptos, most likely in the next 1 or 2 years, it's gonna be the same thing. People keep on buying, and then eventually, maybe if things go to really absurd levels, we might see some sort of major high or whatever. But that's not what we're seeing right now. So again, to summarize, sorry for complicating it, I'm bullish about 15,296, and I suspect the market can bottom out here, head to the upside, take out this low, and we can probably see a further move to the downside. Here's crude oil. There's not much happening here, which is good to some extent. It means that we're going to most likely have a very good January. Why? Because the more something consolidates, the better it becomes when it breaks out. Watch 56.06, bearish on the move to the downside, and watch 58.57, bullish on a push to the upside. Here's the price of gold. Now this is a daily chart, and let me just fix the axis here. So if you look at it from a daily perspective, we had a breakout, and now it's testing the breakout. And I assume the market could look to roll over here. In the short term, of course, we're dealing with a short-term uptrend. So this might easily take a few more days. But as long as you're below 12,780, I'm going to remain bearish. Obviously, I could be wrong. And there's some people that, are willing just to sell as soon as we hit the sell zone. Other are just going to focus on this little short-term uptrend we're dealing with right now here. And when we take out this little short-term uptrend, that point they turn bearish. So they combine the short-term trend with the big picture. Because in the short term, we're in a little uptrend. Big picture though, we're bearish. Here's the DAX 30. And the price is moving back to the downside here. The Germans are not really that interesting to buy. It's not like buying the S&P 500, which slowly and slowly just heads to the upside. In either case, the market remains bullish, as is very clear to see. Have a nice low here, which was a higher low compared with this low here. Same time, you have a higher high here in relation to this and even to this. You can connect your trend line. There are different things you can do. And now we're pushing back to the value zone where people probably will look to go long, and then for this to head to the high and then potentially higher. So very straightforward. Just need to be patient. As long as you're above 13,000, there's no real reason to be worried about this current decline. Take out this level though, and the market could potentially continue to decline. And at that point, I will not be bullish any longer because the market can continue to slide to the downside. And that, guys, concludes today's market update. I'll see if I can do something for you tomorrow as well. I am not 100% sure about that, but I'll try to do a few videos for you. And I'm back with a live presentation on the 28th. As well, don't forget, if you like the website, don't forget to come back and visit us. Don't forget to try out our demo accounts if you want to trade Forex. It's a good way to learn how to trade Forex without risking your real money. We do also have the premium education section for anybody that wants to know more about trading. We have educational videos, and we have trade signals and so on here for free. So check it out, and if you have any questions, just let me know. Thanks.